All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Thursday, February 1st, 2018. Done with January, heading into February. A couple of things to point out. You guys know I pay attention to seasonality. February tends to be one of the lagging months. Historically, it's up slightly and is one of the worst months to trade. And when we've had some down moves, they tend to happen in February. Maybe part of that is the early year excitement in January leads to a fade in February, which we could get right now. And we're kind of seeing that right now. We've had that huge run in January, and now we're getting that move down towards the end of January, and maybe that continues. We'll see. But just keep that in mind. That doesn't guide and tell us what we're going to do, but it's good to know that February tends to be a lagging month. So knowing that and seeing what we see in the market where we've had this huge run, we've had this, big drop in the trend here. And this morning we're down slightly, but more significantly than the percentage we're down, which is not that much. You can see right here. It's that we're breaking the 9 and continuing to break the trend, and a lot of ugly looking stocks, especially in some sectors that have been working like retail and semiconductors, so and housing and a few others. And a lot of momentum stocks are showing plenty of weakness right now. That doesn't mean we think the market is tanking, but a healthy pullback is in order, and we should be aware of that. You guys know we've been positioned to the downside, and so far that looks pretty good. So hopefully that continues. So that's the look of SPY, IWM, a little bit of a different pattern, but same thing, continuation to the downside. And the Qs, which have held up a little better, are still this morning below the 9. So what we've been waiting for is happening, looks like, in terms of that pullback. Let's look at a few areas here. Financials, almost the exact same pattern. Oil, actually popping this morning. So, oil doesn't always move with the market. We actually have a decent entry today if we want. So we're going to watch oil very closely. XLE, a little bit different. So there's oil itself, which looks really strong. And then there's energy, which is made up of energy, stocks related to oil, and those are not doing as well. So if we make a play today, it would be for oil and not energy. So we'll keep an eye out on oil today. Biotech, very weak after a huge run. Another one of these areas that has been very strong that's getting hit right now. And if we pull up XHB, which is housing, also another area that has been very strong that is weak right now. And I could do the same thing for retail, XRT here, and we're seeing the same thing. A lot of weakness. Semiconductors actually holding up better, but a lot of individual names have been hit really hard, like something like OLED here, or ESIO, which had really good earnings and has pulled straight back from that earnings breakout. And that's been a theme with a lot of these earnings. They made a nice run, but have been hit really hard with the market. So at this point, I'm staying away from a lot of the earnings plays as well. Looking at our focus list stocks here, we've got Tesla, which actually made a really nice move yesterday. Our entry was around 340, I think 347, 348, or maybe, I don't remember the exact, maybe 350 something, but pulling back a little bit. The stop is under the 9, so we're still away from that, but it could move very quickly today. UVXY, popping, and we're still holding this range here. Our entry was around 10, but if the market tanks again, we expect a big move in UVXY. And at this point, we've got a break-even trade or a big win. So I'm either going to get stopped out at my entry point, which was down here at 10. I'm not going to go for a little win. It's either going to be break even or the big win around 14, 15, 16. Lulu finally starting to continue down. So set to open in the 77s, hopefully get the move to 75. And SQQ is popping this morning up to 17. Race had to get out of because of earnings, and it looks like it's popping on earnings, so good thing. We got out of that. So this ended up essentially being a break-even trade. Little tiny win, but essentially break-even. Now, for today, I may look, a couple of things. To the long side, MDGL is still strong, very strong. And oil. obviously is very strong. So there's UW potential in UWT here. So those are the two things I'm looking to the long side. To the short side, we have Netflix, which had fantastic earnings. Now looks like a good runner short. My only hesitation here is this was such a big move yesterday that I think maybe intraday yesterday was the spot to enter instead of here today where it's already down to 267 from a high of 285, but there's still potential in it. I'll watch Facebook very closely. It's had a really weird day in that it reported yesterday the initial reaction was very bad, but today it's popping up. And if it shows weakness here, and if it can't get through here, I may look to short Facebook as well. And then a bunch of retails are looking ready to crack. Urban below the 50-day moving average. Ralph Lauren is right up under the 9, but it's making a huge, I didn't even realize this, making a huge pop down today, so I probably can't short that now. It's too big of a move down. Roku looks ready to break this trend here and also is breaking down below the 9 and the 50-day moving average. Under Armour below its 50-day moving average after looking like it was going to pop, and BKE also ready for that secondary move down. So a lot of retails were already positioned well to the short side, and we have the one long in Tesla. So even if we don't do anything today, we're positioned well if the market pulls back, and I could potentially enter oil as well today. And of course, if the market were to reverse strong to the upside, we'd change that, and I'd quickly do an analysis of stocks to play to the long side. So that's the plan today. I'll see you guys either later today or early tomorrow.